The decision made by India to begin taxing returns from fixed income mutual funds is expected to strengthen the country's lenders' efforts to attract deposits. This will help in financing a revival in the country's credit growth and increase profits. The nation scrapping tax incentives for some debt mutual funds has paved the way for banks to garner as much as $36 billion in deposits from the asset managers, according to Sunil Mehta, Chief Executive Officer of Indian Banks Association, a lenders' lobbying body. The move comes as a respite for the financiers as the widening gap between credit offtake and deposits has sparked risks of asset-liability mismatches and pushed up funding costs. Let us investigate in this video how this government's decision will affect the banking sector. Rising loan demand from companies and consumers has buoyed annual credit growth to 15.7% as of March, compared to a 5-year average of 10.3%, according to Reserve Bank of India data. However, the deposit collection has failed to keep pace and is currently a little more than 10%, pushing bankers to look for ways to lure funds. As a result of investors parking funds with more attractive asset classes such as debt mutual funds, which gave better yields due to the favorable tax regime, deposit collections by Indian banks have lagged behind. Real returns on bank deposits, which in most cases are at an interest rate of approximately 7% annually for 2 years, remain low despite the fact that the government reports that inflation reached 6.44% in the month of February. Niranjan Awasthi, Head Product, Marketing and Digital Business at Edelweiss Mutual Fund said the removal of tax incentives on some debt fund investments will place a roadblock for the much-needed development of the nation's bond market. Lenders have been increasing deposit rates in an effort to make their products more appealing to customers, which presents a risk to the profitability of their businesses. According to the information that can be found on its website, the State Bank of India has raised the interest rates on a number of its deposit plans by more than 100 basis points in the past year. Karthik Srinivasan, Group Head of Financial Sector Ratings, ICRI Limited said, banks are likely to see a slower rise in the cost of deposits as the increase in deposit rates would be gradual now. In conclusion, India's decision to tax returns from fixed income mutual funds is expected to benefit the banking sector by boosting deposit collections and financing credit growth. The move has come as a relief for lenders, who have been struggling to keep up with rising loan demand due to a lack of deposits. While the removal of tax incentives on some debt fund investments may hinder the development of India's bond market, banks are likely to see a slower rise in the cost of deposits, making them more appealing to customers. Overall, this decision is expected to increase profits for banks and help stimulate the country's credit growth.